Hi guys, and welcome to the fourth part of the Compounding Trader series, where I will discuss about adding to winners. In order to understand why adding to winners is an important factor of trading, at least for my system, and why I'm actually doing it, you would have to understand the psychology behind adding to winners. And it's mostly about being counterintuitive and actually forcing yourself to do something that isn't really coming easy to you, and that you're basically fighting your human instinct of taking your profits, right? You're taking the harder route to trading, where for a short period of time you will just go against your senses. You will not you will not go the traditional way where people take profits. Uh, Obviously, at some point you will have to take profits. You will have to close your positions, but going against the grain, I think, is the way to succeed in the long term, and I think that's what we should be looking forward to. I think that the best way to go with this is just showing an example, and we should go off of this because um, obviously it's way easier to see rather than hear about it. So this is a 30-minute chart between last week's price action and this weekend right here. We're still ongoing on this weekend. Obviously, we have discussed about the overnight ranges and about the weekend price action ranges that I am trading around. And so I think that we can take an example from here. Let's say that you wanted to short this rise on Friday, right? So let's take the magnet off. You wanted to short this rise on Friday. So at this point, you are in a short from, let's say, 91.8K, based on the value area high of the range and the fact that there is a weekend price action high and some wicks that have showed some support here, and that could be a simple change from support to resistance. And so there are a few confluences also. The two overnight ranges from Thursday and Friday have been taken with this big week with the unemployment claims on Friday. And so at this point you are sitting in profits from 92k, and it's weekend, so you're probably not reading because there is not enough volume. It's not really worth your time, and you should be probably focusing on something else in your life. And so we are in the position that we are short from 92k, and there is a pretty much bearish market structure locally going on. Okay, so what we should be looking at right now is the fact that we are in profits. That's the most important thing. And what will most of the people do? That's the second thing that we should think about, and we should assess it. So most of the people will probably, due to the fact that they're in this profit range of 1.5k move, let's say, they will think about taking off their trades maybe on Monday morning. Okay, so at this point I would be interested to understand what are the inflection points that I can add a position to this trade conservatively in order to maybe target lower prices. So let's say that I'm targeting this 87.5k here, which is probably, yeah, it's the middle of the range. It's a good support. It would also maintain the market structure that we have created on the medium time frame, let's say. The bullish market structure we have created on the medium time frame. So let's say that I'm actually looking forward to this 87.5k 5k level, right? So at this point I'm having a few options. Okay, I would think about, the first thing that I would think about is understanding where the price has gotten from to this value at a high range. Okay, so we have had this pivot here, and I have noticed on Thursday that this pivot has been put right at the weekend price action low. Okay, so the weekend price action low was just a bit lower than this week that we have had on Thursday morning, and so at this point we have rejected from breaking down from the weekend price action low, and we have went to the weekend price action high and actually touched the value high of the range. Right, the range is from, let's see where the range is from. The range is from the drop of 106.7k, okay, up until today. So it's the same range that we had in the previous videos. What am I looking at right here? I would like to see a move down on Monday or maybe at the start of the week, where we would take this week that is also defending the weekend price action low from last week, okay? So for me, this is not really a big support here to worry about. I know that most of the people will take profits once we go down to this range. So if we go down here, I am expecting most of the people to take their profits, okay? Because we're going to NSFP and we can probably go higher from here. It is obviously possible, but for me, let's say that I took this trade, this short from here, and my invalidation is 94.8, right? So 95.8, let's say 91.8 here, so it's 300. 300 would be 0.6% of my account in risk, okay? Let's say that this is a B-type idea, so I can actually go ahead with the 0.6% risk because it's a good level of risk. And at this point, I'm thinking most of the people that are unprofitable will go with two things. They will either take their profits at these lows, or they will put their stops at break even and actually get thrown out of their positions. Obviously, if you are trading and if you're profitable, you know that putting your stops at break even doesn't really make that much sense, just by the sheer fact that whenever you have an idea and you want to output it in the market, you have to understand that you are assuming a certain initial risk that you would probably expect to give it to the market if you are wrong, right? I think this is a problem with most of the people that are trading and most of the people that cannot really fight their humanness, let's call it like that, where they don't understand that when you are moving your stop to break even, so let's say that I'm in profits here from 91.8 and I'm putting my stops here now at the weekend just to not risk anything at all. This tells me that I'm afraid of losing my open profits, or I'm afraid of actually going into a losing trade after I was in a winning trade. And this tells me that I have an issue with assuming my risk and understanding that the idea is not finished until either I lose my 0.6% initial risk or my trade goes compounded to my level of 87.5k. Okay, so I don't care about having zero risk. This is not about, the trading is not about having zero risk. It's about assuming your risk and making sure that your risk is in control and that you can de-risk properly when it's needed. Okay, so at this point I have a 0.6% risk. Obviously this is just an example, and then I want this low to be taken here. If I want this low to be taken, I will say, okay, if this low is taken, I will see how fast this low is taken, and I would expect that at this point, let's say 89.5k, we will probably expect to see a sharper move to the downside. If we do see a sharper move to the downside on Monday, let's say, I would like this to be my sell 2, okay, sell 2. So this is sell 1, and that is sell 2. Okay, so I have two compounded trades here. One compounded trade with one compound only. Okay, if we go lower, if we go higher, I don't care about it. I'm just keeping my initial position here. Okay, that sounds good. Now, this is one of the ways that you can add to your winners. Another way you can add to your winners is the following. Let's say that we're actually moving higher here. Okay, let's say that you're moving from here, you move from the weekend price action high, and then you go lower again, and then you retest. Now, this is an important thing to keep in mind. You are moving here on a move out of the weekend price action high, and the chances are, if you are making another lower high here, and you are actually starting to retest of the value area high here that we have created on Friday, because it moved. If you were checking the same price action as I was, on Friday we actually moved our value area high to 91.8 after it was around 92.8. And let's say that we are retesting the value area high that was created from Friday, well, not created but shifted from Friday. And then at this point I can say, okay, listen, I have my sell one here, I have moved upside and there was no power in order to go over the top of the range at 94, 95k. I have another bearish lower high that shows me that locally we're not really doing that well and the price isn't really doing that much of a good job of going higher. And now I can just say, okay, I will have my sell 2 here on the retest, and maybe at this point I can think about, okay, why would I have a sell 2 here when I can have a sell 3 here, right? So now we're talking about, we are aggressively adding to our trade that showed us that we are still in a local downtrend. So we're actually getting confirmation of the fact that we're in a local downtrend. We are retesting the value area high. We're selling the second time in this trade. And now if we go down from here, like I showed here, we will probably be able to put even a second compound. So the trade will be first trade, first compound, second compound, right? So it will be triple compared to the first trade that I initially had and had 0.6%. So at this point you can do a lot of things. You have basically a trade that was compounded 2 times, and you can do 2 things. You can let the trade be, or you can start thinking about having your stop losses for these 2 compounds. Okay, so where would you put your stop for the second compound? The first compound, obviously, the first trade, the initial trade, would obviously stay at the same risk level because this is your initial idea. But the second one can be like, let's say I will go here, right? So I will have my stop loss 2 here. But at this point, you have your initial trade with stop loss here at the top of the range. You will have your sell 2, which is basically your first compound with stop loss above the lower high that was created formerly. And you will have your sell 3 here. That will probably make sense for you to put the stop loss around the second entry, right? The second entry or the initial trade that you had in the market. So now this is a pretty good position. It's triple the size that it was initially, and you have a compounded trade. You didn't take profits. You didn't put your stops break even. That's utterly stupid. You should never do that unless it's something like, okay, I'm in a weekend trade, I'm going before weekend, and maybe I expect erratic movements around, I don't know, just to protect myself. Okay, but here I'm not protecting myself. I'm just saying I'm afraid of losing my trade. I'm afraid of losing money after the trade was in profits. And that is one of the biggest traps that you will ever encounter in trading, where your human senses tell you to preserve what you have, but never risk to get more. Okay, this is something that will this is a traditional example of you having to fight your humanness and saying, okay, I will flip the switch on this idea and say, I don't care about losing, winning, or whatever. I'm just trading this chart and I think that my idea is good enough. Okay, so if you would have moved, let's say this is your trade now, and let's say you move your stop loss here from the top of the range to let's say entry, you will not have the chance anymore to have this trade that you have had some data on and understood the context to compound it on. Okay, because let's say you get this this lower high here, chances of you starting a short here are rather low, because you will say, oh, okay, maybe it goes higher, maybe it hovers more here, so it's not worth the time. This is just a psychological thing where if you have a winning trade and you see data on it, right? So I have data from Friday and the context that it went higher from the retest of weekend price action low, and that's fine for me. I don't mind that. Okay, I can work with this. I can say that this is probably not forceful enough and it was a news move and it was some short squeeze. If you're checking the volume on Excel chart, you will see that it was mostly a short squeeze. Okay, there were some longs here, but mostly a short squeeze, and you can see that the longs are getting pretty eager to get into positions because we have moved quite sideways for quite some time here, right? It's already, yeah, it's quite a lot of time that we have moved sideways, maybe 1 month and a half. And so at this point, it's very important to say, okay, I will fight this urge to move my stops to break even. I will fight this urge to take my profits in case we go just lower instead of, let's just say we don't go higher here and we just go like this, right? I will fight my urge to take my profits at these lows, and I will say, okay, I will add to this winner, because my point is not to be afraid when the price is going in my profits. The point is to keep pushing your winning trades as much as you can in order for having bigger profits when the market is telling you that you're right. Okay, you're right. You're just doing this trade is good. Your process is good, and why am I not pushing my profits? Why am I not pushing my winning trades to lower to my initial closing of the trade that I have, closure of the trade that I was thinking of at 87.5, and maybe if I see a reaction at 87.5 that I like, maybe I will even go on and compound more. Maybe I will look for lower. Maybe I will look for us to take the lows from 84k that are still weak and poor lows, right? So this is the way that I am thinking about adding to traders to winning trades, and I think that the thing to take home from here is to understand that we have to fight our humanness. We have to fight our urge to play defensive all the time, and we have to understand that winning long term is pressing your winners and letting your losers just you have to let your losers die as fast as you can. Okay, so if my loser will go to 94.8 here, let's just say that I'm actually not getting any chance of doing anything here. Like, let's just say that this is not going to happen, this is not going to happen, nothing from this is going to happen. We're just gonna do this. Let's just say we're gonna do this. Let's just say we're gonna do this, and then we will take this as support, and we'll go even higher, right? So at this point, it's fine. My idea was bad, and I will take my loss. And so this was the video for the adding to winners chapter. Hopefully it will help you understand that trading is not about charting or anything else. It's only about fighting your urge to be defensive, fighting your urge to not risk on your trades. And once you understand that risking on your trades is the only way you can make money, you will win in the long run. So thank you, and I'll see you in the next video. Bye.